Good morning, traders. It is 8:02 a.m. Chicago time on Wednesday, the 4th of January 2023. If you weren't here yesterday, Happy New Year. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2385. Thanks for being here. Let's take a look at what we've got today in our pre-market summary sheet this morning. The key elements, of course, we have manufacturing PMI, which is likely to be a mover this morning at 10 o'clock. We do have the JOLTS job numbers, job openings, but this one is a tricky one. Oh, hey, how you doing? This one is a tricky one. And most importantly, we have the FOMC minutes today at 2 p.m. We're looking for movement on that release. So that's what's ahead. Lower than expected French inflation data, just like Germany yesterday. Bank of Japan in its fifth straight. You know what? Let's kill this camera. Fourth straight. Bank of Japan is in its testing. 1, 2, 3. Test. All right. Guess you weren't listening. You weren't hearing me. There's just man. I upgraded this PC, super high powered PC, and it's just been nothing but trouble, cameras and whatnot. Um, all right. So um, we're going to go back to. I don't know where I lost you guys. Uh, but I was talking about the fact that. Kevin McCarthy could not be elected yet as majority leader in Congress. And this is a historic event. I think there have been um, about four votes to try to elect him. This has not happened before, at least in the last 100 years or so. And and so that means Congress cannot take action or move forward without um, um, a majority leader. So this is going to be a very interesting start to the fiscal picture in the U.S. government. ISM manufacturing today, very important, likely to be a mover. Also, at the same time, U.S. JOLTS job openings. Um, and then the key one is FOMC minutes. Let's switch gears here, look at and talk about the ES. The ES, 225,000 contracts traded so far, and the inventory is 91% long, 91% long. This just means that 91% of the volume um, has occurred above the prior close. So the inventory is 91% long. The range is 30.75 points. We just pushed the high to 38.70, but we did get Fed's Kashkari coming out, who is a voter, coming out and speaking at 9 Eastern, says appropriate to continue rate hikes at least at the next few meetings. until confident inflation has peaked and should hold target rate, which he sees at 5.4%. 5.4%. There is increasing evidence that inflation may have peaked, but he is concerned that if the Fed turns and reverses, that it is likely to stimulate more and cause a bigger problem in terms of inflation. This is quite significant. We saw a little bit of movement across the board, but at least this voter sees the terminal rate at 5.4%, which is something that's been elusive. Um, but that's about it. Let's take a look at yesterday. Yesterday in our review, if you were here yesterday, you know, I strongly suggest you watch TraderBite to understand the setup for this trade. But we talked about the that the S&P is basically in balance and is poking above balance, and the expectation is it would likely fall back into balance down at 3860. And then if it doesn't hold 3860, I'm looking for the overnight stat. So the trade is as it climbs, I'm looking for weakness on the lifting. In other words, how well is it lifting and how well is price progressing upwards? Remember, we monitor, we're technical traders, but the auction gives us insight into the quality of the behavior, the quality of buying, and so on. And so it turns over and we have this impulse. Remember this arrow, these arrows that look like this, these represent impulses. We have this impulse down and we're looking for the first pullback for short, which occurred at about 38.70 yesterday, for a run to 60, and then the next target's 42. It got to 60, it got the 42, and then the next level down would have been 38.2150, the prior low, and it got that as well. So pretty big setup and trade for the beginning of the year, and we talked about it before the market opened. Here's what the markets looked like yesterday. Let's move over to the S&P. Switch channels here. What we have so this is what we had yesterday. This is how this has set up. It's set up very nicely. So we had a push down into 72-ish, I think. Yeah, 72. So this is important, this 72 number. A push down to 72, a push up into this 88, giving us a relatively wide opening swing. We hold the mid VWAP for the session, and then we end up making that push higher, which was expected. Then we have what is basically an impulse down, a reversal on an impulse down. So we pushed up directionally. We could see that the rotation is relatively large here, about 13 points or so. And then we reverse and we push down the other way for a rotation of about 13 points. And then we have a tiny little pullback right there. And then we finally clear this low. So this is where the trade on the short side is triggered, or now we're really looking to trigger or execute on the trade. And there is a minor pullback against that prior level right in here. So we double tap to 72, and then we have a small pullback, and that's where the entry basically is. And we're looking for it to clear down into the 61 right down here. So it quickly gets to 61, 10 points of cover, 3.5 points of risk. And then it continues down into the 42, the prior, the overnight low. Now the trade is done, runners on, and the runners are for 21, and that's achieved down here somewhere, 21. And then the rest of it is really, it looked like it was reversing here. You could see there's a pretty decent rotation higher back here. And this to me looked like it was done on the short side. How do I see that it's done on the short side? We have a low. There's nothing special about this low, but then we pull back to the IB, hold the IB, higher low. Now this is interesting. Okay, so now we have a higher low. This is significant. And then we have an impulse higher on that higher low. This tells us that the shorts are cooked. They're done. There's some covering going on, and it's not likely to see a low for a while. And that's exactly what happened. It's impulsed up. So we're looking for a continuation. Impulses generally come with continuations. There's the continuation. And then it just closed in this area and settled at 38.46. We're back to that 38.50. And if you recall yesterday, I talked about the 38.60 to 38.55 area being the magnet in this area. And so what do we do when we open? We open up and then we immediately push into this 38.50, 38.60. And what do? We consolidate in that 38.60 zone with the point of control resting right in here in this 38.58.75 right here against the 38.60. What this is saying is the market's in balance. The market's in balance. We talked about this yesterday. The market is in balance. So yesterday we opened above balance. Remember, I drew these lines like this. This is where balance is. Um, we opened above balance and we expect the market to fall back in balance. This is normal auction behavior. It's represented a little bit better in this chart right here where we're compressing or consolidating profiles. You can see that this is a relatively mature, for those of you who took statistics, this looks like a relatively mature profile. It has a very prominent point of control. This profile, by the way, is indicating that we're very likely to see a strong move out of here. The question now is to look for, the idea now is to look for, um, is to look for an impetus or an incentive or a trigger or a reason for that to happen. And that may be FOMC minutes today, not likely, but we opened up here. We opened right against value high of this, the blue range here, value high of this balance, and the expectation, more likely than not, high probability that we would be responsive back into that 60 right in there, which is what we got. And then the 42 was the overnight low yesterday, and we ended up doing exactly that. So this is classic auction theory or auction trading, behavior trading. Now that yesterday was inside of balance, we absorb yesterday into this profile, and we could see that it's just, it's getting even more prominent. So 38.55 to 60 remains the magnet. And guess what? This is where we're opening today. We're opening right in that magnet. We are trading right here live right now, 62.50 against the 55 magnet. It is likely to be trapped here yet again. So what does this mean to you as a trader listening? This means that you just chill with those breakout trades. Those breakout trades are not likely to, unless, it all depends on time frame. It's very important to always think of, when you're listening to someone talking about trading, or if you read something about trading, the first thing you have to address is what? The first thing you have to address is, what is this person's time frame? Because you can see a tweet from someone saying, I am short all the way. I'm short full boat. I'm short my entire account. But if they're sitting here swing trading $1 million account and they're looking to hold for 2 to 3 weeks because they're, trading against like some yearly Bollinger or something, then that's going to be very, very different than somebody who's looking to hold a trade for a couple minutes. For me, I'm generally set up to hold for minutes. And if there's a runner, then the runner can go on for hours. It can just, on a trend day, it could just keep going and going and going. But my job is to trigger, cover my risk, and then let the runner run wherever it goes, short or long. I have no bias. So for me, I am just looking to cover my risk. I'm looking for that first scale out from my trigger to cover risk, and then the market does what it may. Why? Because the market is completely and absolutely random. It's just a random generator, In the moment, in the shorter time frame, it's a random signal generator. In the long time frame, it has trends, or it has tendencies, I should say. And so looking at the behavior and looking at the auction helps us understand what those trends may be. So for example, if we start to be initiative, we take advantage of the fact that there's high compression here, high kurtosis, a lot going on in this 5560, and it starts to run up and gets through 3900 and stays bid, then I know that this week high becomes the next key target, right? This week high up here in the 3920, that becomes a key target. If the 3920 is taken and we continue higher, then this becomes the magnet. The next balance zone becomes the magnet. 39.9250 becomes the next key place. Of course, between the high of 20 and 92, there's a fair amount going on here. There are various levels of different time frames, but in general, that's how you want to approach the market, in my opinion, to have a strong hand in it. Okay, looking at the Nasdaq, same story. The Nasdaq's in a multi-pronged, very much in a price discovery push with imbalance. So the Nasdaq's in this unique position where it's just moving, then it's balancing, then moving to another section, then it's balancing. And the Nasdaq yesterday was in this low volume node, and it looked like, and I said, watch what it does at the high volume node. If it holds that high volume node, then it's likely to turn over and come right back to the prior settle. If not, then it'll likely hold that high volume node and start squeezing to the next low volume node, and so on and so forth. So yesterday, the NASDAQ was in range. So guess what we're going to do with this profile? We're going to lump it in to make it even fatter. Now the NASDAQ's profile is even fatter. The point of control is 11,054, but really it could shift between these two prices back and forth. So the NASDAQ's really stuck between 10,900-ish, 10,920 or so, and 11,050. This range right here that the Nasdaq's in is really back and forth. It's pong. It's just bouncing back and forth. There's really no directional conviction. So you want to pull out those tools from your trading setup or trading plan that has you trading with imbalance. So every trading plan starts with defining a time frame, defining a product based on your budget or the size of your account and your risk tolerance. So you decide on how much you're going to risk per trade, how many points is that reasonable for your time frame? But the next big thing, you must figure out where your trading plan forks into two pieces, is a trading plan for when the market is in balance, which we call chop or consolidation, or accumulation or whatever. And then you need a trading plan for when the market is out of balance or is imbalanced or is in price discovery or is trending or whatever you want to call it. You have to have a plan for both of those modes. And then our job to do when doing our homework is, what is the most likely, what is the current market condition, and what is it likely going to be for the session, so I can decide what what breaks that, when does it go from balance to imbalance, what sorts of tools, what kind of setups should I be targeting? Should I be mean reverting? Do you want to be mean reverting when the market is trending? No, you don't. So you have to first recognize what the market condition is, and the condition in the Nasdaq is actually, it is in price discovery, which normally means trend, but in overall balance, a very unique position to the NASDAQ. It is discovering price very aggressively. We know why, because it has all these behemoths, and they've been froth froth full of bad news, and very strong, very strong impact from interest rates and so on and so forth. So that's the NASDAQ for you. So what are we looking for the S&P for today? Look at how balanced this is. I mean, really just stuck in the middle here, and very much balanced when it comes to the volume profile at 3860. And as long as we're in this area, you're really looking for quick hits, short-term trades. You know, in baseball terms, you're just looking for the next base. You're not looking for any home runs in this. So that's where what the condition is in the ES immediately. In the NQ, nothing different here. The NQ is the same. It has had an impulse pullback continuation. It has had a shorter term impulse that is incomplete. The Nasdaq, as long as it holds this low, is very likely to test this high. So it's very likely to try to reach up into 11,390, and it'll still remain in balance through this range, right? But immediately it's stuck between this 11,050 to the 10,900. So it's stuck in this range right here. The Nasdaq is in balance. You could see the point of control of this balance is about 10,950. That's going to continue to remain the magnet for the NQ. Okay, even though it's a fast product, it really isn't going anywhere. You could see that, you know, big down day, big up day, down then up day, up and then down day. That's balance, and it's frustrating for most people who don't recognize it. It's very frustrating, and it ends up being very costly and helps people just give up. Crude, a whole different ball of wax. Crude has this beautiful upper balance, beautiful lower balance, and crude has successfully crossed the 77, which is the line in between these two balance points. As soon as it crossed the 77 yesterday. This is a very quick move down to 74. 74.15 is the next level down. 74.15. This product has traded incredibly well when it came to the auction. So crude is in the lower balance here, and we can actually draw a profile around. I know this is running long, but there's a lot going on here. So we can take this lower balance in crude, which started here, and draw a profile around it. And we could see that crude, look at where it is. It is right against the point of control. That's the point of control right there. That's the most traded price. And look at where crude is. Boom, right on top of it. 74.50, 74.15 is the next key area to test. It has moved from this upper distribution to a lower distribution. So what we have is a profile that looks like this, and it has cleared this upper distribution at 77 and has moved lower. So crude is very likely to continue to test down. It has a weak structure. Crude has weak structure from 73. If it gets into 73 and is offered at 72, below 73, it's the 72 handle, you have a pretty good run in crude down into 72.35 or so. That's a pretty good trade in this weak structure, these single prints there. Back to the ES, and let's wrap up. The ES for today, very simply, it's likely to just be back and forth, back and forth. The primary and the secondary scenario have an equal chance, and we are likely to just sit sideways in the ES, expecting responsive selling. We're opening right next to the overnight point of control, likely to be choppy, expecting it back down to 78.60. So I'm expecting it to be responsive down, consolidate, a gap to settle, internal gap to settle trade into the 46 and then potential bounce. It's anybody's guess. At some point, we're going to get FOMC today, FOMC minutes, and that may change things. But really, overall, I'm expecting it to just sit sideways. The alternative is to sell off immediately, get an impulse higher, and in that situation, now we're looking for the prior week's close, 38.78, and then a potential for a push into this thin stem that we left behind from above. So 38.80 becomes the key target for today for the S&P if it decides to rally. That's as far as I believe it will go. We'll see how it goes. Don't expect too much range, but that's what we've got. Good luck today. I know that was a lot to digest. You might want to watch this again. Good luck today. Understand the auction, understand your risk, and just try to detach yourself from outcomes. Put your trade on according to plan. Follow the process. Whatever the outcome is random, but hopefully you have an edge over time. Don't let one or two or three bad trades knock you out. Take care.